While inflation has been moderating, it has been playing to script as what we had intended for. But again, I think we are in an environment that is very uncertain and an environment where we still see elevated inflation globally. We still see in terms of tight monetary conditions globally as well. So these conditions are important for us to monitor. And thirdly, also, given the developments that we have seen so far in terms of global supply chain, especially in terms of commodity prices. So we need to be mindful of that. So we are vigilant to monitor this as well, and we can keep.
So vigilant on potential upside risks to inflation. How would you describe the balance of risks when it comes to growth? And of course, I wonder how Malaysia has been affected by the slowdown that we're witnessing in China currently.
Yes. Last year, we recorded a growth of 8.7%. This year, we expect growth to be coming towards the end of the year already. We expect it to be around 4%. It's something partly because of the high base that we had last year and also due to the reopening of the economy. But this year, we do see a lot of headwinds in terms of the slower global growth, as we had heard in terms of the IMF. The projection for this is 3%. And I think even for next year, it's going to be 2.9%. Second is that in terms of the trade, external trade has also been coming down. So that has also impact on Malaysia as a small and open economy. And third, in terms of the tight market conditions that we're seeing globally. But nevertheless, having said that, while we have all these headwinds coming from the global elements, but Malaysian economy has been resilient. And this is supported mainly by the strong domestic demand. And this is supported by a number of factors as well. First, in terms of labour market. I think if you look in terms of the unemployment has come down from 5.3% during the peak, and now it's at 3.4%. And it's moving towards 3.3%, which is the pre-pandemic level for unemployment. Secondly, also in terms of labour participation, it is at the highest level now, 70%. In fact, we look at the pre-pandemic level, it was at about 68%. And also in terms of wages, it has been increasing. So this supports in terms of domestic demand. But in addition to that, we also have tourist arrival, not just globally, but also into Malaysia. And we have seen in terms of the travel receipts has actually increased. For example, if you look at the second quarter of this year, travel receipts amounted to about 16.8 billion. And this is about 84% of what we saw in the second quarter in 2019, pre-pandemic. So we're moving towards that as well. So we've got some support from the tourism sector as well.
Yeah, it sounds to me with everything that you're saying that there are potentially latent inflationary pressures that are building because of the tight labor market. But one thing that I'd like to talk more about is oil and the impact higher oil prices are going to have on the Malaysian economy. Of course, Malaysia is a big producer of oil. So how do you read the impact of higher oil prices?
Okay. That will be mixed as well because we also export oil and we also import certain fuel as well. So it's a balance actually, I would say. Yeah. You mentioned just now in terms of the tight labor market. I wouldn't say it's tight. If you look in terms of the wages growth, second quarter this year was about 3.8%. And what we have seen in the past, we've had higher wages growth as well. But that does not fit into pressure for the price.
Okay. One of the themes here at the annual meetings is geoeconomic fragmentation. And I wonder whether, in a way, Malaysia is actually a beneficiary of what's going on here, this China plus one model, the fact that some supply chains are reducing their dependency on China, moving to countries like Indonesia and Malaysia. To what extent are you seeing those flows come into the country?
Okay. Interesting point that you raised with regard to geoeconomic fragmentation. I think it's not so much about benefiting from that. I think what's more important is that how do we get there? In terms of the over-concentration of supply chain, where we rely in terms of certain markets and certain sectors for input, for example. So that has actually resulted in terms of the pressure from the supply chain perspective. So what's more important is that we remain open. Basically, we attract all investment to come in and do have operations in the country so that this can contribute in terms of ensuring that supply continues to the global economy. So I think more from that perspective that I think it's more important to see from that perspective rather than benefiting a particular country or particular nation.
And finally, when thinking about central bank policy, you're not operating in a vacuum. You must be keeping a close eye over your shoulder to see what the Fed, what the ECB, what other major central banks are doing. With the Fed signaling now that they may be at the end or close to the end of their own rate hiking cycle, does that take pressure off other world economies, emerging market economies, to seize with their own hiking cycle as well?
But we have seen in terms of whenever there's risk of sentiment elsewhere, be it due to the statements from the Fed or be it in terms of where the Fed are in terms of the hiking cycle, that would have an impact on the emerging market, including Malaysia as well. So we do see that happening. Yeah, but of course, I think we monitor closely in terms of what's the monetary conditions elsewhere, and how that comes into our policy decisions with regard to the policy rate is that how that actually have an impact in terms of the outlook for risk to inflation and risk to growth. These are the two main considerations that we look at in terms of formulating our monetary policy.